Hey everyone, it's Ben Hardy here, and well, the Feds just raised rates yet again, so we have to talk about how this is going to affect both the new and the used car market. Before getting into this video though, as always, if you're gonna save time and money the next time you purchase a car, link to my car buying guide in the description down below. And then if you see more content just like this, then I recommend you subscribe because I post videos every single day. Let's get into it. So yes, the Federal Reserve just raised interest rates yet again by another 50 basis points with the federal funds rate, which puts it at like 4.5% at this point. If you don't know what the federal funds rate is, this is basically the rate that lending institutions can charge each other with overnight lending. So like, let's say that, at the end of a day, a lending institution doesn't have enough money to cover everything. Well, they can borrow money from another lending institution, but they have to borrow it at the federal funds rate, which being about 4.5% means that any sort of loans that they give out to their customers are going to be that much more expensive. Now, obviously, this does have the side benefit of basically meaning that savings accounts and all that kind of stuff are going to pay more. But if you want to take out a loan, it's going to cost quite a bit more. But that's not the only big news with this meeting. The other big news is that the Federal Reserve basically implied that this isn't it for the interest rate increases. Like, they're going to continue to increase rates. Everyone thought that this was pretty much it and then we're just going to sit here for a while, or maybe rates will, start to go down in a few months. But no, they basically stated that yep, this is where we're at now, but we're not going to stop until we are over 5% with the federal funds rate. And so that means that we're going to get a few more rate hikes. And they said that they don't want to just jump right up to the higher rate. They want to do like small incremental increases. And so what that means is that in February, we're probably going to have a rate increase. And then in April, we're probably going to have a rate increase as well. And so we might not see peak rates until the middle of next year, or close to the middle of next year. Now, the last thing that I need to talk about before we dive into the car market is just overall inflation. So the inflation report the Federal Reserve saw before they raised rates showed that inflation has cooled off a massive amount. In fact, most areas are seeing deflation, as in prices are actually going down. Now, the biggest area of inflation currently is actually with housing. Basically, rent and all that has gone up substantially month over month, but pretty much everything else is in the negative. And so this means that we're already starting to see everything contract with the overall economy. There are a few areas that are still hot, but they will surely cool off in the coming months, or at least that's what everyone hopes. And now let's dive into the exciting part, and that is talking about how this is going to affect the car market. Let's start with the new car market, and then we'll dive into the used car market. So with the new car market, this is actually going to cause it to contract even more. This is something that we've already been seeing leading up to this Federal Reserve meeting, as people are purchasing fewer and fewer new cars. I made a video talking about how I was confused that people weren't purchasing as many new cars because I feel like the used car market is still very overpriced, but new cars are just so expensive. I happen to make another video where I talked about how the average brand new car is equal to about 70% of the average American's yearly income, household income. And that is way above historical norms. Typically, the average brand new car in terms of pricing will be about 50% of the average American's household income. And so the new car market is overpriced by a substantial margin. And then on top of that, we have higher interest rates. Now, yes, you can get a lower interest rate on a new car versus a used car, but that lower interest rate, difference compared to used doesn't matter if the new car is overpriced by, $15,000 basically on average, because the average brand new car is like $50,000, the price of the average brand new car should be closer to like $35,000 with where the average American household's income sits. And so this is going to lead to new car inventories to continue to increase. This is what we've already been seeing with the numbers. Dealerships across the nation are starting to get more and more inventory, and they're not selling that inventory. And it's crazy because these dealers still think, some of these dealers at least still think that they can charge over MSRP for these cars. And it's like, wake the heck up. That is not the market that we're in anymore. Like, you're going to sit on this inventory for quite some time, even if you were only charging MSRP. Over MSRP, yeah, you're not going to sell that car unless it's something that is super super, super hot, which there's not a lot of stuff on the market anymore that's super hot. Like, people are even backing away from product that even in a normal car market is considered hot, because nobody wants to buy a car right now. Everyone is so worried about the economy. So dealer inventory is going to increase. And on top of that, manufacturing is also starting to increase pretty much across the board. There are some automakers that are still struggling slightly, like Honda, for example, Land Rover as well. They're still struggling with production. But the average automaker at this point is now able to produce more cars now than they were at the same time last year. And so we basically have a situation in the new car market where fewer people are buying and production is going up, and interest rates just went up yet again, so affordability is even lower. And so what this is all a catalyst for is prices have to come down. Now, a lot of people have said, Ben, automakers are not going to lower their MSRPs. And, I agree with that. When automakers increase their MSRP, the chances of them coming down on that new MSRP is extremely unlikely. However, they will most certainly start to release rebates sometime next year, especially with how big these contractions are. Anecdotally, the dealers that I've been talking to have told me that they have had a huge shift in terms of demand, right? Where they were mostly selling new cars for the majority of this year, and selling quite a few used cars as well, but mostly new. And now a lot of these dealers are starting to turn into, new car dealers are starting to turn into used car lots, where they're mostly selling used cars, and they're selling very few new cars. And so the only way this inventory is going to move is it's got to be discounted some way. So it's probably not going to be, MSRPs decreasing, but, don't be surprised if you see, $5,000, $10,000, $15,000 off of MSRP with rebates, especially on the more expensive vehicles that really aren't selling right now. Full-size pickup trucks, full-size SUVs, the more expensive vehicles that are typically purchased by non-luxury buyers. And so, moral of the story here with the new car market, this interest rate increase is going to put even more downward pressure in terms of demand, and this is going to force automakers to finally release new incentives. They don't want to do it, but if they want to sell new cars, they're going to have to. And then when it comes to the used car market, it's kind of a mixed bag. So first off, this interest rate increase is going to, make used cars even more unaffordable, just like new cars. And so that will put some downward pressure on the used car market. And again, we're seeing consistent declines with the used car market still. Again, they aren't as high as what they were earlier in the year, but they're still pretty big declines that are larger than what you'll see in a typical market. And so I see that continuing. I don't really see the declines increasing. And the reason I don't see them increasing is there are enough people that need a new car but can no longer afford a new car, like a brand new car, because of those prices, right? That are going to be pushed back into the used car market, and that is going to put some upward pressure. Now, I don't think it's going to be enough upward pressure to stabilize prices or definitely not raise prices, but it's going to be enough that it's going to slow the declines with a lot of used cars slightly. And so all you really need to know for the used car market for the time being is it's going to continue to just slowly decline. So it's kind of like, a crash in slow motion, basically. So I don't really see the prices just like falling off a cliff, but it's just going to be ticking away just every single day, which is kind of painful, right? Now let's talk about how you can use this information to help you out as a buyer, and the whole situation's kind of mixed. So here's the deal. If you wait to buy a car, whether it's new or used, you're most likely going to save some money on the sales price with both of the vehicles, because, both markets are going to see some declines in the coming months with all the demand destruction that we're seeing. However, we already know, based on what the Federal Reserve has said today, that interest rates are going to increase yet again. And so if you're part of the 80-ish% of buyers that are going to finance a car, then what that means is you need to do the math and determine if it's actually worth waiting. Because, if you, let's say, wait 3 months to purchase a car, and maybe it goes from being MSRP to $2,500 below MSRP, but then you have to pay, 1% more in interest on the auto loan, then it might not necessarily make sense over the course of the entire loan with how much more you're going to be paying in interest on that vehicle. And so just do the math on the car that you're purchasing. Basically, total purchase price, right? Total out the door price. So tax, title, licensing, everything. Plug that into a car loan calculator with the interest rate that you qualify for. And again, make sure you include all the fees and everything, so you know exactly what your true total out the door price is in terms of your financed amount, how much in finance charge you'd pay with all of the fees. and then compare that to a purchase price that is slightly discounted, and then basically just see for yourself if you're going to save any money. And chances are, with the interest rate increase that we're going to be seeing in the next few months, or the interest rate increases, I should say, rather, you might not save money in that case. However, if you are a cash buyer, then well, if prices go down, you're always going to save money because you completely get around the whole interest rate situation. And so I guess for cash buyers, you know, my advice that I've been saying for quite some time now, unless you're a business owner looking for a end of the year tax write-off or something, just take a step back and just continue to wait because, yeah, new car price is completely unsustainable. I've been saying that for a few videos in a row, but I'm going to continue to say that because I think that people just need to understand, like, the new car market is just way overvalued. It is, I would almost consider it a bubble at this point. And then used car prices, rather, again, like I said, they're declining every single week. So like, just wait for them to kind of normalize. That's what I would do with the used cars. I would just wait for that market to fully normalize, and then it's like, okay, well, yeah, they'll continue to decline in price because, well, depreciation, but, you know, once the market's normal, then it's like, okay, swoop in and get that deal that you have been waiting for. And then I guess circling back to those finance buyers, because I didn't really give you guys a solid thing to go off of. Again, like I said, do the math. Be patient. Don't jump into a car deal. Like, unless everything makes sense in terms of, again, the monthly payment, the out-the-door price, and, again, the out-the-door price with finance charges, right? You always got to do that. Then just don't do it, right? If you see after all charges, including how much you pay in interest, that it's just way too much money, then it's way too much money. And just take a step back and wait, and, you know, there could potentially be a better buying opportunity in the future. Not guaranteed, but I mean, worst case scenario, you wait for a few months, you save up a little bit more money, you put a bigger down payment on the car, and then you pay less in interest over the course of the loan. I don't see that as a bad thing whatsoever. Hopefully this helps you guys out. Let me know what you guys think about this recent interest rate increase and your overall thoughts on, you know, what's happening in the market. I'll see you.